Hi everyone, it's Grace. Welcome back to my channel. So I know a lot of you are concerned about the unstable market and its performance for the rest of 2021 and 22. I made a video before about the 6 signs that the housing crash is coming. To check out that video, click on the top here. To put in one sentence, high inflation rate and high unemployment rate is the current economic situation. However, we actually see that the unemployment rate dropped a little bit to 5.4% in July, so that's a good thing. Today, I will update on the real estate markets in metropolitans in Florida, including Greater Miami, Greater Tampa, and Greater Orlando. Florida is one of the hot destinations for people to buy and invest in its real estate markets because of its many attractive policies and tax benefits. I made a series of 4 videos, each detailing a different aspect of the Florida tax benefits. To check out that playlist, click on the top here. There's so much information online that sometimes it can be very confusing. So I try to keep it as simple as possible with a clear focus. For the purpose of today's discussion, I will only focus on the single-family home market, which is the most sought-after real estate categories in the pandemic. Before we begin today's video, remember to subscribe to my channel and click on the bell button so you'll get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. Today's video is important if you consider buying or investing in Florida metropolitan real estate markets. So let's take a look at how these markets have been performing in the second quarter of this year and what they will become for the rest of the year. The first region is Greater Miami, which is Miami-Dade County, that are known for the pillar industries including the financial sector, international trade, and tourism. The first important item is closed sales, which is the number of homes that have been successfully sold and closed. Besides closed sales, there's also pending sales. But pending sales sometimes don't go through because of numerous reasons, so I will not be using it in this video. From June 2020 to June 2021, on a year-over-year base, the closed sales increased from 1,000 to 1,500 units. But from April to June 2021, closed sales actually dipped a little, from 1,584 to 1,542 units. So it shows that the market is actually cooling down for a little bit. The second item is the month supply of inventory, which is calculated by the number of available homes for sale by the number of homes that are sold. It's a simplified way of showing the relationship between supply and demand in a market. Usually anything above 5 months is a buyer's market and anything below 5 months is a seller's market. The month supply of inventory dropped immensely from 4.8 months to 2.2 months year over year, but the April to June number remained the same at 2.2 months. What you should keep in mind is that the month supply of inventory does not apply to individual buyers or sellers. It shows how quickly the market demand is absorbing the available homes for sale. It means that the Greater Miami area is a highly sought-after market where the market demand takes on average 2.2 months to soak up the supply. The third item is active listings inventory. One thing to keep in mind is not to confuse the month supply of inventory with the active listings inventory. One shows the relationship between the supply and demand, and the other shows the actual available homes for sale. The active listings decrease yearly from 4,900 to 2,800 units, and slightly increased from 2,700 to 2,800 units in the second quarter. So the number of homes available for sale in Greater Miami dropped immensely since the pandemic hit last year. But in the second quarter, the inventory slightly picked up. The last item is median price. Median price is more reliable than average price because the higher end and the lower end tend to skew the average price. And you should use the median price for your reference when looking at the price trend for a market. The median sales price increased yearly by 29% from $388,000 to $500,000. However, it decreased from $515,000 to $500,000 from April to June with a 3% decrease. So clearly, the price trend in Greater Miami is cooling down for single-family homes while the inventory is slightly picking up. If you're searching for properties in this market, you might notice that the price decrease starts to pop up more than before. The next area is Greater Tampa. The Greater Tampa area includes Tampa, St. Petersburg, and Clearwater, which is known for pillar industries such as IT, manufacturing, and maritime sectors. The closed sales for Greater Tampa increased from 4,800 to 5,200 units year over year. From April to June this year, the number of closed sales increased from 4,900 to 5,200 units. So both the yearly and quarterly sales grow stronger. The month supply of inventory for the month of June decreased from 1.6 to 0.8 months year over year. In a quarter, it slightly increased from 0.7 to 0.8 months. So this means that buyers are really interested in buying homes in Tampa, and they're moving in a faster pace than Miami. The active listings in June decreased yearly from 6,500 to 3,700 units. The quarterly inventory slightly increased from 3,100 to 3,700 units. So the inventory also slightly picked up. But does it have an impact on the price decrease? The answer is no. The year-over-year median price increased by 23% from $269,000 to $331,000. The quarterly price also increased from $313,000 to $331,000 with a 6% increase. So we can see that Tampa is a different market than Miami with a 34% lower median price and with a different market pattern. Buyers continue to show greater interest and stronger purchase in Tampa with a slight pickup of the inventory while the median price continued to grow steadily. The last area is Greater Orlando, which includes pillar industries such as IT, manufacturing, tourism, biotechnology, and aerospace. The number of closed sales for Greater Orlando increased from 3,100 to 4,400 units year over year. Quarterly change slightly increased from 4,000 to 4,400 units. So both yearly and quarterly sales increased just like Tampa. The second item is the average days on market, which is another way to understand the relationship between supply and demand, but can be more directly understood. The average days on market yearly change for June decreased from 52 to 29 days, while the quarterly change decreased from 42 to 29 days. So both yearly and quarterly, that's a big decrease as home sells faster than before. As for the available homes for sale, the inventory for Orlando decreased from 4,600 to 2,200 units on a yearly basis, and increased from 1,700 units to 2,200 units on a quarterly basis. So the inventory in the second quarter also slightly picked up, just like Miami and Tampa. The median sales price increased from $280,000 to $350,000 in June with a 25% increase. Quarterly, it also increased from $326,000 to $350,000 with a 7% increase. So very similar to Tampa, buyers also show stronger interest in Orlando with a steady price increase while the second quarter inventory slightly picked up. Now that we've seen the data from the second quarter, what is the prediction for the third quarter? The trend for the second quarter is probably going to continue in the third quarter. Miami's price is sort of plateaued because it all at once increased to the ceiling, and it will probably cool down for the rest of 2021. This is also reflected in the increase of inventory and decrease of price. For Tampa and Orlando, the price change is gradual and not as sharp as Miami. Even though the inventory slightly picked up in the second quarter, the price will continue to grow for these two markets. So what does it mean for buyers and investors? You should keep in mind two basic principles for predictions. Short-term prediction depends on policy, and long-term prediction depends on industry growth and trends driven by the pandemic. Because of the Delta variant, we now know that the COVID-19 is becoming COVID-20, 21, 22, and we don't know how long it's going to last. And the outbreak of the variant will slow down the economic recovery and returning to normality. So people are nowhere near returning to the office completely, and working from home is likely to remain as a long-term trend. And that continues to drive Florida as one of the destination markets in the country where people continue to work and live here due to policies and tax benefits. There are also differences among these three regions. Greater Miami's entry capital requirement is higher, and the price trend is more volatile with greater ups and downs. If you decide to enter the Miami market, higher capital is required. Growth is definitely faster but riskier, and your risk tolerance level should also be higher. Greater Tampa and Orlando are seeing steady growth, which is not as volatile as Miami. It requires lower capital to enter these markets, which are suitable for buyers and investors with low to medium risk tolerance level. So this is today's report for the second quarter of 2021 for Florida real estate market. I will provide a link to the report, which is free for you to download in the description below. The report also includes the details for each county if you're interested. So we will see what happens in the third quarter of 2021 and whether high inflation is only temporary. As always, thank you very much for watching, and I'll see you on the next one.